Welcome to Building Tomorrow's Insurer, where we explore the cutting edge of Insurtech and digital innovation in the insurance industry. I'm your host, Nigel Fellowes-Freeman, the founder and CEO of Canopy, and I could not be more excited to be joined by a titan. How about that for a phrase? A titan of the global Insurtech scene, CTO and co-founder of ManyPets, where you may know them more formally as Bought by Many. Guy, it's so nice to have you here today. Thanks for joining us. I really appreciate it.
Very welcome, Nigel. Very looking forward to the conversation.
I think sometimes these conversations start off so more smoothly when you start at the beginning.
Okay.
And I would love to understand maybe how you got into technology. Where did your journey maybe into tech and then into insurance start? And we can start there, and then we'll get into the Bought by Many journey.
Yeah. So I did engineering degree, manufacturing engineering degree, and whilst I was doing that, I was sponsored through university by ICL, who now Fujitsu were subsequently bought by Fujitsu. They were kind of the UK equivalent of IBM at the time. Mm-hmm. And I went to one of their manufacturing plants and worked there for a year, building the manufacturing lines, whilst I was at university, and decided that software just looked like more fun. So I said to them, as I was leaving university, look, if you can find me a software job, I'm here to stay. Otherwise, I might just do something else. And they found me a software job.
Oh, perfect.
So I started off programming C on Unix and providing sort of fourth line support for the Unix operating system. Mm-hmm. Obviously not having a clue what I was doing, but that was the job.
Make it up.
Yeah. And then just sort of, carried on through software from there. And my last gig with ICL, I think it was Fujitsu by then, was building First Direct's online bank. So I was the software development manager of the software team that built the online bank for First Direct.
Wow.
Which was, just a truly extraordinary project because we were really pushing the boundaries on anything on the internet at that stage.
Yeah.
So this was
and when was that? What year was that?
96 the project started, and 98 I left, I think. Having been live. Great project to be in, terrifying. We were sending out CD-ROMs each week to queues of people trying to get onto the system. So we were sending out 10,000 CD-ROMs a week for people to load and get on. So just a fantastic project to be involved in. And then from there, I just went on. I went to a much smaller consulting firm. I did a year in India running an offshore development operation there. I helped them start a full-stack web development office in San Francisco, just in time for the boom to crash.
The GFC,
Wasn't there for very long. And then came back and went into sort of consulting in technical consulting in financial services, which led me into insurance. And so one of the big gigs there was down in Guildford with Allianz. That kind of got me into the insurance world. And then my last gig as a consultant was for Close Brothers. They were digitizing their kind of wealth management proposition. And Stephen Mendel, who is my co-founder in ManyPets, was running their wealth management division at the time. And we both happened to leave at the same time, and we were both saying, financial services is a bit old and crap, and surely we could do better.
Yeah.
And, the normal founder stuff.
Yeah.
And so we then came up with the idea of Bought by Many, and it was a time when the social media APIs were much more open. So about 2012, certainly the Facebook API was ridiculously open. It kind of all blew up with the Cambridge Analytica scandal a bit later.
Yeah.
But we sort of saw those APIs and thought we can use these APIs to create groups of people. And by using it just really meant, you join our group, we allow you to invite a friend through Facebook or invite a friend through LinkedIn. And we can show you your friends because we can get that from the API, and you can select who you want to invite and all that. It's really cool stuff. Obviously, 2 years later, that was all shut down as a ridiculous idea. But
at the time,
it worked.
Yeah.
And, I don't think we were doing anything nefarious with it. And so we built Bought by Many, which was the kind of group buying of insurance idea. And the philosophy we started with was we knew that financial services organisations provided better deals to institutions for the same products that they provide to people, individuals. And so we thought, surely we can create these groups that kind of make a sort of institutional scale, then we can do deals with insurers or deals with wealth managers for those groups. And
get the buying power by having the group.
And that was the original Bought by Many idea. And really, we only went into sort of insurance, because it's a relatively easy part of financial services to get into in terms of regulation, and the insurers are used to dealing with small distributors and all that sort of. So we went into general insurance there, and we did deals with about 30 odd sort of mainstream insurers and smaller brokers for, I guess, sort of niche insurance lines. So like, insuring a thatched house, or traveling with a medical condition, or having a shed full of expensive road bikes. So we used our groups. We created 300 groups. We had about 1 million people registered, and we were sort of directing them effectively with kind of discount codes and URLs off to all these places to get better deals on their insurance. And that was all working great. But the commercials aren't great if you're just an introducer. We were only seeing commission on sale. We weren't in control of conversion. All those sorts of problems as a sort of.
And you have to keep selling. Like
you have to keep selling. Right. Yeah. And we're doing all the marketing spend, at the top end of the funnel. And at the time that worked well, because we were doing niche products. We could effectively pay for very long tail search terms on Google and Facebook, and so the cost of acquisition was relatively low, but the volumes were also relatively low, and the trail was non-existent. And so we ultimately decided we needed to, play a bigger part in the value chain and put our own insurance products in the value chain, and all the volume was going through our pet groups at the time. And so we thought, well, that's the place to start. So we created our own 2016, 2017. We created our own pet insurance products, and effectively switched over all of those groups to go through our quote and buy and go into our insurance products. And it kind of worked, right? And and a combination, I think, of being new and fresh and bringing some nice web journeys to the situation, and some new products, some innovative products, but also just there was a big boom in pets at the time. Pet ownership grew really from 2017, right? And there's a huge boom through the pandemic. So between 2017 to 2021, the pet market was growing dramatically, and we were
just rode the wave
at the right time. With hopefully a decent product
to
go with it, but we were also fortunate in the market growth.
Super interesting. And you mentioned there kind of web pages and kind of user journeys being important in terms of as part of that success. Has there been other elements of the kind of technology structure of the organization that have helped? Is there certain things that you thought would help, maybe help more, that haven't helped as much yet, or kind of how they've developed?
So I think I would say we launched with 7 products, 3 of which were kind of unique in the pet market. We covered pre-existing medical conditions, we provided a fix for life policy, and we did a money back policy, so a bit like a no claims bonus type thing, and all of those were unique to pet insurance. It turns out that there was a good reason some of those were unique to pet insurance, and that we don't do them anymore for good reason.
Hard to make money,
So I think it was really, we made a big deal of those unique products in the press, which helped, I think. But from a technology perspective, at that stage, I don't think you get any advantage being a startup. You can do, because at the front end, you can deploy better sort of web JavaScript frameworks and CSS frameworks and make it nicer, just because of
micro interactions and that kind of stuff.
You're not carrying any legacy on the web estate.
Yeah.
But actually, at the back end, it's such a complicated setup and such a complicated, business process, reporting setup, that it takes you a very long time to build maturity in that, regardless of what technology stack you're in, right?
Yeah.
So actually, you're playing catch up rather than being ahead in those core fundamental bits
policy
of the
system pieces.
Yeah.
Yeah.
We were lucky in that. Well, we. So our underwriter at the time was Munich Re, or Munich Re Munich Re Digital Partners.
Remember them well.
Yeah, and they selected IB Suite from IBA because what they wanted to make that the core platform for all of their Insurtechs.
Okay.
and we were the first, and they selected that platform and they put us on it, and it was a huge advantage for us. Because, you know, had we built it from scratch, it would obviously taken us 12, 18 months longer to get live. You know, we got a sort of gang of consultants from IBA who came and helped do that implementation and did a really good job of that and helped us through the process of figuring out these products. And so, although, you know, ultimately we're going to end up on our own technology stack for everything, getting that in and using their expertise and using that platform definitely got us moving much more quickly.
And in terms of you, I suppose focus, isn't it? It allows you to focus on your surface area of things you need to solve for is just less.
Exactly.
Because
so we worried about the product design in the front end, and and they worried about the kind of, you know, the big chewy bits in the middle. And is there a thought to continue to migrate? Are you still on that system today? Like, is there a thought to migrate? We are in the UK. We're not. We use it in the UK, and we didn't use it in Sweden, and we didn't use it in the US. We will ultimately move away from it, and I think there's, you know, it's not a reflection of that system. It's a reflection of the fact that we are now very much purely a pet play, and actually what we see is we're more likely to move into non-insurance pet products than we are to move into other lines of insurance.
Interesting.
And so for example, in the US, we might have to think about the edit on this. But in the US, we have a wellness product, which is a bit like a savings plan. They're called, I'm not quite sure, they're called in the UK health plans or something. And they're not underwritten. Essentially, you're saving into a pot, and then you get benefits from that pot. And, you know, there's deals with the vets to do regular treatments out of those pots. And putting that product onto an insurance platform, probably a non-starter, right? So then you've got this choice of, do I run a separate sort of platform for other product lines that are non-insurance, or do I try and sort of push a non-insured product into my core policy platform? And I think ultimately, for, you know, if we want a coherent platform that you can have a single sort of monthly subscription for your pet, if you like. So in the UK at the moment, we are purely insurance, but, you know, I definitely see that we're more likely to move horizontally in pet, if you like, than horizontally in insurance. If
that's interesting. Yes, like in Australia, they have the pet, the kind of vets and stuff you go to have, like a scheme that the veterinary services run, which are you put into a pot and you can get it teeth cleaned and like one visit a year, etc. This sits completely outside insurance. It's just something that sits within a kind of veterinary group.
And in the UK that works. You take that out generally directly with your vet practice rather than through a third party. Although the vet practice sort of outsources administration to a third party, the relationship's directly with your practice. I could see that changing. You know,
interesting. Yeah. And you mentioned a little bit on the growth journey around the pandemic and around everybody having nothing to do and thought, well, now's the time for me to, because I'm walking a lot, so let's get myself a dog or etc. And so, how did you deal with maybe the large growth in that period? Was there anything from a business perspective that you were like, oh, like volumes have gone up, were there squeaks and cracks, and like how do you deal with that kind of really accelerated growth?
Yeah, so on the policy side, not that big a deal, in the sense that, you know, the systems, you know, the volumes are small, right? For the systems, you know, we were selling, I can't remember, like 16,000 policies a month or something, you know, which it was massive for us and a good chunk of revenue, but actually from a system perspective, it's pretty trivial. The claim side is much more complicated, much more intensive, because pet insurance is very claims volume intensive relative to other lines of insurance. Like a third of pet owners will claim every year, which is clearly not true in home and motor.
No.
And so we were seeing at that time something like 9,000 claims a week. And so that gives you both a technology and an operational headache. And at the same time, we were kind of re-insourcing our claims. So when we first launched pet insurance, the whole claims process was outsourced to Conveyor.
Okay. No, it's TPA, like a TPA.
Yeah, entirely. And their technology, their people, to some degree our process, but largely them handling it all. And that started very well, but they really struggled with our growth, and they struggled to recruit enough people to manage our growth. And eventually it got to the stage where the service just wasn't working for us, so we decided to bring it back in-house. I don't think we really knew what we were taking on at that point. The volumes were already enormous, and so
They're going to get bigger.
Yeah. So we were building both the operational team and the systems at the same time, and we weren't building it to take on a few claims a week. We were building it to take on like 9,000 claims a week. Yeah. And so although we migrated over sort of one product set at a time, it was still very large volumes from the get-go. And the reality of that is that both of our systems and operations were really struggling, because you're coming from zero, right?
Yeah.
And we did it, and we went through a period, probably the last from 2 years ago to sort of 6 months ago, where our service metrics weren't in the right shape because we were just always struggling to keep up, but I think we've got that now. We've got it kind of under control. All the metrics are in the right place, that we think we're processing at the right sort of cost, and that's given us the time. So we built the claim system ourselves from the ground up, and I think it's now pretty good. And the great thing about having done it ourselves from the ground up is it's now entirely under our control to take it from here. So whether we integrate into vet practice management systems, or whether we build in huge AI capabilities, or it's kind of under our control now. We're not waiting for a vendor to make that decision for us.
Super interesting. You mentioned a little earlier on around kind of product innovation, and I think you guys are third largest pet insurer in the UK. And as part of that, like, how do you think about product innovation in terms of there's specific products you have in market today, or part of your growth journey that were kind of really like the key drivers of why someone comes and goes, "Yep, I'm gonna buy a policy from you"?
Yeah, I mean, I think product innovation in insurance is really tough, and I think during the Insurtech wave, if you like, there was quite a lot of hype around this.
Yeah,
right?
Lots.
Yeah, I think ultimately insurance is some complicated maths.
Sometimes not that complicated.
No, but exactly. And and that maths has been refined over the last 250 years, and to pretend that you can, do a better job of it is probably not real. Obviously, the thing that is changing now is the availability of data to put into those formulas, so that you can be more and more accurate, I guess, in those risk models because of the volume of data that you can now access and process.
Yeah.
But ultimately, you're still trying to pay out slightly less in claims than you collect in premium, and you can't really control what that claim volume is. You can't control the illness and accidents of pets. All you can control is how much you pay of that illness and accident, if you see what I mean.
Yeah, totally.
And so, and I think the other factor that makes it complicated is people don't really want to spend a whole lot of time figuring out whether an insurance product has got every little nuance they need for and they don't know, right? They don't want to read
PDS. No one wants to go into that. Yeah.
So I think saying how do you innovate on an insurance product is quite a difficult question.
Yeah.
I think you can absolutely innovate on the quality of the service you provide and the slickness of that. You can help people through both the sort of remediation of the problem and the payment as quickly and slickly as possible. But yeah, I think saying we can produce an insurance product that's fundamentally better or different to anyone else is a big claim.
Big claim. Yeah. Big jump to get there.
Yeah.
And I think when I was chatting to somebody yesterday actually, and they were talking about parametric insurance, and it's I think I was thinking about from a product, and obviously it was far away from pets really, but in terms of it hasn't really it's been around a while and hasn't really got to scale. And I think part of that, kind of when I look from the outside in, is exactly what we're talking about, which is kind of not well understood yet. Claims data is not really there. Kind of people aren't really willing to put too much capital at risk to kind of work it out. Because to your exact point of the innovation is that you just pay out if these certain things happen. But it doesn't seem to have got to scale. Like in terms of
and that feels like there's only a relatively small number of scenarios where you can actually nail down that X or Y has happened. You know, like flood levels or something.
Objective or what it is, flood, earthquake, etc.
In pets, it's very, very difficult, right?
Yeah.
Because vets will have different opinions on what a treatment should be, or and so how do you automate that, right?
Yeah,
it's very, very difficult.
Very, very difficult.
So I think I'm sure there'll be sectors of insurance where you can make it more and more parametric, but there'll also be areas where it's just
impossible.
It's just not practical.
Yeah. When you spoke about technology and you spoke about claims, obviously you took it in house because you wanted to control, and now that's given you broader scope to do more, because you have full control. I'm sure there's all parts of the business when you're thinking, do we build, do we partner, do we buy, and I know when we speak to a lot of our customers and prospects, a lot of the big guys want to build all of the time, and generally take a very long time to do it and never really hit the mark, and have to go through that pain cycle of trying before then looking to partner or buy. Like, how do you guys think? Do you think about that at all? Like in the business?
All the time, and we constantly question ourselves about whether build was the right decision when we're halfway through. Do you know what I mean?
Yeah,
because it's scary, right? It's big numbers and big numbers,
big R&D numbers. Yeah.
So, like, I can describe the philosophy, if you like.
Yeah.
I don't know for sure if it's correct.
Yeah.
So the position that I guess I took from the beginning was, if we use the same system as everybody else, we'll end up with the same business as everybody else. And so, but if I can find components of systems to pull together, where I feel we can overlay some control on it, then that's probably the right way to go. And where that took us was, we ended up building like basically an insurance API, like that's at the core API that is, customer policy, payments, claims, and we've built those as serverless APIs in Python lambdas in AWS, but all the stuff around that, where there's really good SaaS platforms, we've not touched. So login authentication, we use Auth0. Payments, we use Stripe and Go cardless. Sanctions checks, we use Comply Advantage. And there's probably like at least 50 of those sort of SaaS tools that sit around the edge, and where we haven't tackled some of the core capabilities, but they're not insurance capabilities. Right? They're very generic sort of business capabilities around the edge. So we've used kind of best in breed SaaS integrations for everything that's not insurance. Now I think if we'd started that journey, and I could have found, let's say, a Stripe equivalent or an insurance equivalent of Stripe. So there's somewhere I could have gone and I could have seen API documentation, sign up, get a sandbox, chuck your policy definition in this JSON file and we'll build you an API that allows you to do MTAs and blah, if that kind of API as a product had existed, so this would have been in 2016, 2017, we probably wouldn't have built it. I don't. Okay, that looks too tempting. Well,
we'll have
a go at that.
Yeah.
But it didn't exist. All the big policy platforms, although they're now SaaS, they've ultimately come from Java and Oracle stacks that have been, ported into AWS. Yeah. And they work, right? So, but they don't give you the sort of same flexibility as reading an API documentation with a webhooks, webhook sort of loop on it, and sort of a way you go and build your own business process around that API-centric model. And so we effectively built that. As I say, if that had existed, I suspect we wouldn't have built it.
Wouldn't have gone that route.
Yeah.
I think that best in breed's interesting. because lots of conversations we have are folks now trying to do that. But to your point around you having the sophistication to build that API layer that then allows that to happen, lots of folks are trying to do that, like put MuleSoft wrappers or something over the top of their stack to be able to then have that flexibility. But they have lots of different systems, and therefore it becomes very complex for them to take that approach. Once you've kind of gone down a mainframe approach, it's kind of hard to walk back.
All that.
It's hard to walk back.
I think well, it's impossible, isn't it? I think you have to accept that you're starting again, and I think for some of these big vendors that's entirely possible. Right? They should have their Black Ops team in the corner of the car park, coding it all up,
getting it done
ready for the next generation. Right? I know that's what I'd be doing if I was one of those vendors.
If you, what would you say? What would you advise a new MGA? Something like there's. I was actually we're in London at the moment. I was in Lloyd's yesterday, and we're chatting to a bunch of them. And it seemed that there's a real the growth of MGAs is accelerating. There's more and more coming into the market. Lloyd's are looking to put more and more capital to work, and so I can see this continue to accelerate. And you've obviously gone through a bunch of learnings. Is there anything that you would tell yourself back in 2012 or 2017? What would you tell your former self in terms of if you were starting an MGA? Like, where would you focus your time, energy? What wouldn't you do?
Yeah, good. I mean, good question. Lots. So this depends on a big part on the build versus buy question. So, if you've made the decision to build, the two big pieces of advice I would go with, which is obviously hindsight, is I would control, fanatically, the core transactional model in the center of the system, so that my bordereau was 100% correct and it related one-to-one to the transactions in my database, and I would control the API fanatically as well. Because obviously you've got a team of people building these things, and there's only so much of it you can
look after, keep your eyes on.
Right, yeah. I would control those two things fanatically, and then I'd allow the developers wriggle room in the how you get from one to the other. If you see what I mean.
Yeah, that makes sense.
But if I'm buying, then this is really tough, because you don't find out whether a system you're buying really does what you want in the purchase process. Right? You find out 12 months later.
When it's got either working or not.
Right, and it's either working or not at that point. And so we've been really lucky in that we've done this. This is the first time in my career we've been able to do both. So we've bought a system and built one alongside. And I think that's the perfect scenario if you want to end up in your own infrastructure. But it's very expensive.
Because you put lots of money into two places.
So most people don't get that opportunity. So I don't know enough about your platform actually to sort of really comment on this, but I haven't looked since 2017 really in anger at the market. But if I could find that kind of open API structure where I'm not tied into a particular business process or tied into a particular UI presentation or whatever, then I feel like probably go try it out.
Try it. So flexibility is important. Flexibility of like having something that you can.
The thing that the thing I always struggle with, obviously I'm looking at our own platform thinking, how would I generalize, if I wanted to sell this as a product, how would I generalize this to the degree that any insurer could come and put a product on it, right? And actually it's really tough, because, so for example, in our particular product, when a pet turns 9, it attracts a copay, which it doesn't attract before it's 9 years old. And I think that's pretty tough to generalize in a platform. Like these really small rules that you think, well, all insurance is roughly the same. You're just giving a quote and then you're selling a product and then you do some changes on it. But actually, when you get right inside the insurance product, and we have this concept of inner limits. So you get £6,000 of vet fee limits, but you can only spend £1,000 on alternative therapies for the animal of that 6,000. But how many other products carry this concept of internal limits, or sort of sub-limits of
sub-limits within covers of how they get spent,
and so so the generalization problem is really tough in insurance, even though from a 20,000-foot view, it seems all insurance is roughly the same.
Yeah. And I think we've definitely run into that. We sit within P&C, and we've just done a little bit in life.
Yeah.
And we found the same thing moving into a bit of life. We thought, well, it seems reasonably similar to P&C, but then you lift the hood and you go, oh no, this is different, and this is different, and this is different, and the surface area grows of like things that you need to look after. Yeah,
and it's how to make the platform general, you need to be able to configure, products essentially, don't you? And then, so it's and depending on that configuration can just become almost more complicated than writing another little bit of code that sits on the side and handles a particular problem.
I understand. Yeah. Totally understand. And would you? We've actually managed to get through, I don't know, half an hour, something like that, 35 minutes, without talking about AI yet. So I feel like we need to bring it in.
Done well. Yeah.
We've done pretty well. Talk to me. How will you think about it? Is it something that you're considering? Is it something you're doing today? Is it something you've got to look in the future? Traditional versus generative LLMs.
Yeah. So we're sort of we are. So we're not using AI in the sense that I think most people think about it these days. So I think most people conflate AI and LLMs and basically ChatGPT, right? Or Perplexity. So we're not. Actually, that's not quite true. We're dabbling with that. So we have a hat week every quarter.
Yeah.
And the guys go off and do stuff, and pretty much there's always some AI stuff going on in those hat week processes. So one of the things we've done in that is categorize all our inbound emails and attempt to create responses and but we haven't got anywhere near the stage where we're allowing those responses to go straight back to customers.
Yeah.
But we are categorizing inbound emails using the OpenAI API, and that reasonably successful. But we're not allowing AI to interact.
Is it giving you efficiency gains? Is there kind of human gains?
Yeah, a little bit. Not dramatic at this stage, but we've just hired actually a really good chief data officer, and we've really given him the task of figuring out. He's been with us several months now, how we use AI ML strategically across the business and how we implement that. And the way we're currently thinking about that is we automate a reasonable number of our claims. We have huge volumes, and so we automate where we know risk is low. And we've done that for a while based on some relatively simple heuristics, like, you've been with us a year and you've not made a claim, and it's not an accident, and it's under £500, and it's not hip dysplasia, and it's quite complicated in the sense that we've trawled our history of claims data to figure out what those heuristics are, and that gets us within a sensible risk tolerance of automating those claims. Right? But we're now starting to put a series of ML models into that pipeline. So it's the same pipeline, but we've put a machine learning model that detects duplicate claims, for example, into that pipeline. And that sounds simple, the duplicate claim, but actually it's not. And it's never as simple as it, because actually the person could commit quite often what happens is a vet will write an invoice and we'll get it, and then they'll see the pet again and they'll just amend the invoice and send it in again with a few more rows on it, and superficially it kind of, you think, well, that's half the same invoice and half the not, so it's not quite a duplicate, but it's
Interesting.
So actually spotting duplicates isn't quite as straightforward as it should be. So we've got a machine learning model that looks at lots of factors, like did two claims come in really close together, or is the number within a few pounds of it, or is and by trawling the claims history or the invoicing history and looking for duplicates, we've built a small machine learning model that is now telling us whether or not there's.
And did having your own claim system help with that?
Yeah, that does help with that.
It does, yeah.
Because we use all the AWS services. We're using AWS step functions to manage the kind of pipeline of the claims processing, and so plugging another API call into the step function is very straightforward. And obviously we will continue to build out multiple machine learning models for kind of point problems that we're trying to solve. So, duplicate detection, the first one, but you could see machine learning models for spotting potential fraud, or just any part of the claims handling process. And the other nice thing about having it under our control is that model doesn't necessarily need to make a decision. It can provide some insight to the claims handler. We can say with this duplicate detection, if it's 90% probability, we'll chuck it out. But if it's 80% probability, we'll just flag to the handler why we think this might be a duplicate, and then they can have a look and
Okay. And would you look at customer service as well? Is that an area that would identify to use any of maybe more on the generative side in terms of customer servicing?
I think on the customer service side, we are more likely to use AI delivered by the vendors of the platforms. So
Yep.
we've just signed with Zoom to use their contact center software, and they are working very hard on sort of integrating AI models into the contact center experience. And I think vendors like Zoom or Salesforce, whoever you're on have got, or AWS even, have got the clout right to go after those.
They've got the position to go and do it.
I feel like that's not the place for us to invest.
Yeah. And do you talking about customers? Do you utilize a lot of customer feedback to change your product and change the journeys and that kind of stuff? Is there a customer feedback loop, and that kind of ties into how you think about product and servicing and claims and those things?
So we use lots of analytics.
Yep.
So we use Heap at the front end, and we're always running some form of experiment on the front end, largely around conversion, but what's holding people up in the journey, what are the problem, and I'd say we put there's almost never not an experiment running in that space, and we put changes out when those experiments reach statistical significance. We get most of the feedback we get from we survey customers at regular points in the journey. I'm struggling to remember the platform we use for that, but I'm sure. So we get feedback directly from
the customer. Yeah.
And then obviously people tend to call when something's not working.
Yeah, and let you know.
Yeah. So we often find that the call center folk will say to us, we just had a whole bunch of calls about this. You got to
have a look at it.
Yeah.
Super helpful. It was a Heap you said you used on the front end. Right, that's it's when I guess conversion is so important, and kind of understanding behavior is so important, and I guess with the volumes you have, sometimes we find folks use a bunch of those tooling, but just don't have anywhere near enough volume to run the experiments and them to get significance to be worth it. So you kind of the volumes are helpful.
We're fine. Well, we're on the price comparison sites. As well, so that drives
a huge amount of volume,
a big chunk of volume. So we generally have to run an experiment somewhere between 2 and 4 weeks for it to reach statistical significance. So, we've got plenty of volume. We do I actually don't know the number, but millions of quotes because of the price comparison sites.
Looking ahead, we're getting towards the end, and you've been very kind and giving me all this time. Sure. But I want to look ahead a little bit. On two fronts. The first front being emerging technologies, maybe, and your thoughts on kind of where you and the business and emerging new technologies are going to play a part. I'd love to maybe hear how you're thinking about that and from a strategic point of view.
Yes, I mean it's obviously AI, ML, and data are just playing a huge part, and so the area that we will invest in, I guess, or protect investment in for sure, is high quality data coming from our core systems into our data warehouse, external data sources coming into our data warehouse, and you know, our ability to put that through models to generate insight. And like, I feel that it's just suddenly become, I'm looking for the right word here, like, just, I don't want to say retail, because we're not quite retail, but you know, it's got to the stage where you don't have to have a massive AI machine learning team and build your own models. You know, you kind of got these utility models which you can
just tap into.
You can tap into.
Yeah.
So we're early on that journey, as is the whole industry.
Yeah.
But we will continue to use both, you know, it's kind of Llama type hosted models and AWS and GCP's models to provide insight into our data, and that will drive sophistication of pricing. It will drive, you know, claims and process automation, and it will drive sort of customer insight. So that, for sure, you know, not changing over the next, you know, 12, 24 months. From a core platform perspective, like, we're in the place we want to be. So we're 100% cloud, 100% serverless, you know, 100% API centric. I don't see that changing.
Got the core anywhere you want it to be.
Anytime soon. Arguably, we might, as the code settles right down and we've got some high volume stuff, we might take it out of serverless and put it into some EC2 boxes to reduce cost. But actually, our cloud costs aren't that great relative to, you know, everything else we do. So that may not be worth it. So I don't really see huge change in that setup
core technology
for a while.
Yeah.
Similarly, at the front end, I'm not, you know, we don't use WhatsApp as a channel. That might be a thing. You know, people are starting to, but that hasn't taken off as quickly as I thought it would.
Yeah.
But, you know, I don't see a huge amount of change at the front end. I mean, that's largely device and browser driven, right? And until
sounds like a good like consolidation phase of, like, you've got a bunch of tech and now it's just kind of you've done a bunch of the hard work and now it's time to continue. Yeah.
I think that, you know, the other place that we will invest is simplification, just getting, you know, because we've grown very quickly, we've grown over time, there's a lot of technical debt even within what is a very modern setup.
Yeah.
So stripping that back and simplifying that and getting it to the point where our sort of DevOps is really low, you know, and then we're giving more and more self-service to our underwriting teams and our customer service teams, and we're not having to get involved, you know, in our marketing teams. But, you know, with the exception of the kind of commodification of AI, I'm not sure I see anything hugely dramatic. Definitely opportunities for closer integration with the vet industry, but that's very much a two-way thing. They need to be ready as well, you know.
Yeah.
And I think we're probably slightly more ready than
slightly
most
more
of
ahead.
most of the PMS vendors are, the product practice management system vendors are. So
yeah,
I don't know. But then, you know, now it sounds like, you know, the world moves at an incredible pace, so I'm sure
we'll see what happens. Some will crop up.
Yeah, exactly.
Guy, I want to end up with one final question, and it's a new one that we're starting, and I'm not even sure if we shared it with you, so I'm sure if we didn't. If you could insure anything that's important to you,
to me,
fun, unconventional, doesn't really matter what. Like, what's something that you would insure?
That's a good question. What would I insure? I don't know. I think I mean, I try not to own too much. You know, don't own.
Try to rent everything.
Yeah, exactly. Don't own any jewelry or art.
No.
You know, along those lines. I think. Do you know? I don't know if. Well, I guess it's called an annuity. But I think the thing I would insure, you know, is my free time. You know, if that was possible. You know, that I could sort of put more of my time, I mean, not now, obviously, but in the future into, you know, whatever it is, some sort of the thing I'm really interested in actually is I'm really interested in food and the quality of food and farming systems and how the impact on the environment. So kind of somehow ensuring my ability to spend some time having a look at that area would be interesting.
Absolutely love it.
Yeah.
Brilliant. Guy, thank you so much. It's been
You're very
such an
welcome.
interesting
Yeah, yeah,
conversation. Good luck with everything you're doing. I'll keep cheering from the sidelines. And yeah, thank you so much again. It's been fantastic.
That's great. Thank you.
Well, I hope you all enjoyed the episode. If you want to jump on and watch the video version, head to our YouTube channel, and you will see a bunch of other videos with super interesting folks talking all about the evolution of insurance. So hope you enjoyed today, and see you all soon.